Good morning, everybody. It's Thursday, July 11th, 5:25 a.m. Central Time. Grain markets are higher this morning. December corn futures up 3 3/4 at 4.11. November soybeans up 4.5 at 10.71 1/2. December Chicago wheat up 8 at 5.93. December Kansas City wheat up 9 1/4 at 5.93. December spring wheat up 6 at 6.35 1/2. Quick note, guys, if you are not subscribed on YouTube, if you're watching on YouTube, you are not subscribed, hit the subscribe button. I think we're like 8 subscribers away from 15,000. So let's get there today. Help us out. Appreciate it. What do we got to start here?
USDA reported a flash sale of soybeans on Wednesday. U.S. exporters sold 5 million bushels of beans to China for delivery during the 24-25 marketing year. This is the first new crop soybean sale to China this year. Through June 27th, the book of new crop U.S. soybean export sales to all destinations is the worst since 2005.
This is a small sale. It's routine business. It's great to see China finally on the board with regard to new crop export sales. In any other year, they would have been on the board weeks, if not months ago. This is not a number that will move the needle. 132,000. Tack another zero onto that, make it 1.3 million. That would move the needle, I suppose. There are a whole bunch of sales on the books to unknown destinations that could very well be tied to China. But at the end of the day, the chart that's on my screen here, if you guys are watching, this is what matters. Soybean export sales to all destinations for next marketing year. This includes China. This includes the unknowns, all that stuff. It's even worse than 2019 when we had the trade war going on. I cannot overemphasize how important China is to the U.S. demand base. So this current marketing year, and we still got, 6 or 7 weeks left, China has accounted for 54% of all U.S. export sales. The next marketing year, USDA says exports are going to be 42% of the demand base. That means that, generally speaking, China is 20% or more of all demand for soybeans grown in the United States. That's what they represent. So we need China. We need China around. It's a given. USDA, I'm assuming, has the idea that China is going to be back for a lot of U.S. soybeans as they've been for each and every year in the modern era, at least. Will they buy less because of Brazil or because of economic issues? Yeah, but China's got to come in and buy beans. I know we see comments sometimes like, this doesn't matter. They're just going to cancel them anyways. No, that's not how it works in soybeans. Soybeans, they buy a lot of beans. We saw some corn cancellations last year, and they'll cancel soybeans every now and then. But China is bar none the biggest buyer of U.S. soybeans. And year in and year out, 20% or more of all demand for U.S. soybeans is China. So we very much need them. That sale is not enough to move the needle. We hope we see some more.
Rainfall associated with Hurricane Beryl covered large areas of Missouri, Illinois, Indiana, Michigan, Northwest Ohio, and Western Kentucky over the last 72 hours. Localized amounts of up to 6 inches were reported, although the vast majority of the region saw less than 3 inches in total. The system was nearly perfect in regard to timing and was very good with regard to placement, given the building dryness in some areas of the eastern Corn Belt. Soil moisture is largely sufficient across the U.S. Corn Belt, barring a few pockets here and there. Mostly dry weather will prevail during the next 5 days. This morning's Euro model suggests that rain will return to the eastern Corn Belt during the 5 to 10 day period.
Maybe it's premature to say this, but your summer 2024 weather market is basically over as it relates to weather and markets. If you're going to get a crop scare in the corn market, it's going to be June or early July. And now we've had this big system pass through some of the driest areas of the Corn Belt. You look at the recent rainfall versus the drought monitor, Illinois, Indiana. I know some of the areas in southern Ohio and especially the East Coast missed, but this is a big deal, and we don't really have a soil moisture problem, generally speaking, across the Corn Belt. So, I mean, the markets, I think I mentioned this yesterday, that the relationship between markets and weather kind of dissipates in mid-July. I know soybeans are made in August, but I've never seen the soybean market relate to weather in August the way that corn relates to weather in June or July. So, I mean, if there's going to be a weather or crop issue now, it could be, maybe you run into excessive heat in August and that hurts yields. Maybe you get a late season flooding or early frost type event, or maybe you get into harvest and you find out, the crops out west were severely damaged by the excessive rainfall, and maybe the wet early start hurt things. But as far as the market trading weather forecasts, I feel like that season is coming to an end if it hasn't ended already.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our recent premium videos?
Matt was on yesterday. We talked about the possibility of record crops in Illinois and in other areas of the Eastern Corn Belt. Farmers out west have been very vocal about their issues with flooding, with hail. Farmers in the east have been very quiet. And what does that mean? It means that the crops are really good. This rain system that we saw here over the last 3 or 4 days added millions and millions and millions of bushels to production. So what do the record crops potentially, what does that mean? Me and Matt talked about that yesterday, among other things. We talked about cash markets, farmer ownership, grain marketing, a lot of different things. The funds versus farmers video that I did on Tuesday, I think is a must watch for you guys. I think there's so much misunderstanding as it relates to the funds and their impact on the market. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. If you sign up, you'll get our morning email every single business day at 5 a.m. Central Time. Our premium video for the day goes out at 10 a.m. Central Time in an email blast. We have a text message service that is optional. You'll see all of my cash grain marketing recommendations broken down by crop year percentage, super transparent, easy to follow. This is actionable stuff, guys. What we do here on the podcast and on YouTube is a news show. What we do in the premium stuff is actually stuff you can use for your business. So give that deal a shot this morning, guys.
USDA will release its monthly crop production and WASDE reports on Friday. The agency will update its new crop U.S. corn and soybean balance sheets to include data from the June planted acreage report, which included a sharp increase in corn acreage versus March intentions. USDA is unlikely to make adjustments to their U.S. corn and soybean yield projections. Traders will also be on the lookout for changes to the global supply and demand situation. The report is likely to offer a mostly bearish tone compared to last month with regard to corn prices in particular.
The release time is 11 a.m. Central Time or whenever the hell they feel like posting it on their website. USDA had a big problem with their servers 2 weeks ago, and unless those servers have been replaced or altered, this could very well happen again. When I run the USDA, there will never be a Friday report. It will never be at 11 a.m. Central Time. It will always be when the markets are closed, and I would make sure that happens. Looking at production numbers, so USDA is unlikely to adjust its corn and soybean yields this month. The reason why a higher corn production number is expected versus June is because they're going to be working with new acreage numbers. They're working with the planted acreage number that was released on June 28th, which was quite a bit higher than the March intentions number that they were using in the crop production report last month. Soybean production should be off a little bit, even if they leave the yield unchanged, because acres should be down. Old crop carryout for corn and soybeans may come up a little bit because June 1st stocks were just a little bit higher than expected. And the new crop numbers, Pete probably said it best in one of our recent premium videos. He said they're going to try to balance the balance sheet. And what that means is, okay, even if they add a whole bunch of bushels to corn production, which they're going to do, they're probably going to add something to demand also to balance the balance sheet. And I know you guys are always crying about USDA manipulation. This is an instance where they're actually going to probably falsely increase demand or post an unwarranted increase to the demand projections just so that the balance sheets don't look so bearish. That's the way that they work this early before the marketing year started. So, I mean, the report's going to have a bearish tone, but I think the trade is aware of most of the stuff that we're showing you here. Maybe some adjustments to the South American stuff, maybe something on the demand side, either global or domestic. But I don't know. I don't know if this report's going to be a big market mover.
Ukraine is hoping to develop a peace deal with Russia before the U.S. presidential election. Kiev is pushing for a second meeting with nations worldwide, including Russia, to reach a fair peace deal in Ukraine. The first meeting of this kind, which took place in Switzerland last month and brought together officials from over 90 nations, did not include Russia. Ukraine would like the meeting to be held before the U.S. elections in November due to the chance that Donald Trump might be elected president. Trump has said that he intends to end the war between Russia and Ukraine and has argued against continued military support for Ukraine.
We don't endorse political candidates here, but that picture right there, that's the face of a man who is absolutely terrified of a Trump presidency. And I'll tell you what, let's look at wheat prices, and then I've got a couple comments. So wheat prices have done nothing but trend lower since the market peaked post-Russia-Ukraine war. After the war started, it was like, June or July 2022. We've done nothing but trend lower for 2 years. while this war was ongoing. Brian made a couple comments in one of our podcasts a couple weeks ago, and he said, and I agree with a lot of this, he said an end to the Russia-Ukraine war could actually end up being a partially friendly item with regard to wheat prices for a couple of reasons. The first one is that U.S. funding to Ukrainian agriculture would stop, and Ukrainian agriculture has largely been able to continue to some degree because the U.S. has funded it, and Ukraine has been able to supply corn and wheat on the export market cheaper than what we can supply out of the U.S. So you'd maybe cut out some of that. The second thing is that it is believed, or some people believe, that Russia is selling wheat so cheaply on the export market in order to fund the war machine, essentially. And if they have no war machine to fund, they may not need to sell wheat as cheap, and they may get back in line with global pricing, because Russia's been the global price setter. They've been dragging down prices with their exports. And no, this is not me commenting on like the humanity of the war. I'm just saying this is some things that could happen with regard to wheat in a vacuum if the war were to end.
U.S. ethanol production declined last week. Weekly output of 1.05 million barrels was down 1% on the week and down slightly versus the same week last year. Ethanol stocks were pegged at 23.6 million barrels. The print was up marginally compared to the previous week and up 6% compared to the same week last year. Implied gasoline demand was down slightly compared to the previous week and down 2.1% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down marginally compared to the same period last year.
Margins are good. Ethanol production's good. It's just that we're not going to see U.S. corn demand via ethanol increase really at all, if maybe a little bit, but not in a material fashion next year. USDA is projecting flat demand via ethanol for corn next year. So what does that mean? It means we need these pipelines. We need carbon capture and sequestration. We need SAF. I know farmers hate it. A lot of farmers hate it because there's the eminent domain thing. There's a lot of issues, but gosh, do we need the demand? We really need the extra demand, and it's not much more complicated than that, guys. The demand base is lacking. What did cattle do yesterday?
They were down once again yesterday. Feeders were down an average of $1.94. Live cattle were down an average of 61 cents. Box beef had another down day. Choice ended the day at 324.05. That was down $1.61. Select ended the day at 303.94. That was down 37 cents.
Outside markets, U.S. dollars off a little bit. Stocks are lower, although the S&P, I believe, posted another fresh all-time high yesterday. Bonds are flat. Gold's up $7. Crude oil's up 16 cents at 82.25 in the August WTI. Have a great day, guys. We'll talk to you Friday.